Every day from 6:30 to 8:30 a.m., you can easily make $200 trading the Forex markets. And all you need is your phone and your Wi-Fi or your data connection. My name is KAMAU, and I have been trading for over 5 years, and 2 of those years I have been profitable, and I have helped over 50 plus nurses become profitable traders. And everything that I will teach you in this video is based on real experience. This is not theory. So, what are we going to cover in this video? Number 1 is the importance of timing windows. Number 2 is how to draw your support and resistance. Number 3 is where your entries and exits are. And then number 4, we will finish with risk management. All right, so let's start with number 1, timing window. Now, the reason why most traders lose money in the markets is because they don't know when to time the market. So what does that really mean? So think about your situation if you're working a 9 to 5. You get to your job at around 8 there, and you start officially your work at 9. 9 to 11, you are really excited, you have this energy, you are pushing. Then from around 11 to 2 p.m. there, your energy starts to die down. You are thinking about your lunch, you are bored, and you just want to rest. Then from around 2 to 5 p.m. there is activity, but not as much as in the morning. And the same thing happens with Forex trading. So we have 3 sessions: Asia, London, and New York. And in this case, we will use New York time for uniformity. So the same cycle occurs in every session. So there are specific times during the session when we have the most activity. Most traders don't know this, so this is going to be your secret. So for Asia, the time that the session opens is 9 p.m. New York time. Then London is 3 a.m. New York time, and New York is 9:30 a.m. New York time. So for me, I have chosen to only trade between 9 and 11 a.m. New York time, and that is because that is when we have the most volume in the market. So we've covered the importance of timing window. The next is support and resistance, entries, and risk management. And we will talk about all that in the charts. So let's get into the charts. Let's talk about support and resistance. So we will use 2 candles. That is the only thing we need. And if you are new to trading, you don't know all about candles, we have a full course explaining candles, support and resistance, and everything that I will talk about in our community. Link will be in the description. However, candles give us all the information that we need, because a candle has a high, and the high itself acts like resistance. And then the low of that candle acts like support, regardless of whether the candle is bullish or bearish. So, knowing that, then you can easily draw your support and resistance. Now, how do you know where your support and resistance is? So, we use time. So remember, our goal is to time the market, come in at the right time and take our profits. So for me, what I usually do, I trade from 9:30 a.m. to 11 a.m. and I use the 5-minute time frame. So the first 5-minute candle from 9:30 to 9:35, that gives me my opening range, which is my support and resistance. So let me show you an example. Currently we are in the London session, and in the London session it opens at 3 a.m. So this first candle will give me my low and my high. So I now have my area of resistance and support. It's as simple as that. So the next thing is your entries. So you have your area of support and resistance. So how do you get in? You get in if price either breaks to the upside, giving you a bullish candle, or price breaks to the downside, giving you a bearish candle. It's as simple as that. So how would you do this in real life? Let's use this example here. This is the London session. So this 3 a.m. candle sets the high and the low. So I would get in the moment price breaks out and closes below as a breakout. So I get stopped out, but then I re-enter again because these two candles, they are giving me the same thing I am looking for, a high and a low. And then the moment price breaks out, you get in again, stop loss below breakout candle or above breakout candle, and then you can target this low and you just wait and see how price behaves. Now, let's talk about exits, because you lose a lot of money on your exits, not even your entries. So, how do I exit? Number one is I have a stop loss. And my stop loss is above the breakout candle or below the breakout candle. If I'm stopped out, I am okay with that. The second thing is I want you to pay attention to this one candle. It's a bearish candle. The second candle, this one candle is a bearish candle and it sets the high and the low. Then the second one breaks to the downside, giving us an entry to go down, which means that if a bullish candle was to print, then that would mean that if the next candle breaks to the upside, then what you have is a reversal signal. And what you do is you exit your position and you can even take a buy position now. All right, let's talk about risk management. You want to lose what you can afford. I am making about 100 per trade and I am risking about 50 to make a 1:2. So this is about a 1% in my account. So don't risk any more that you are willing to lose. And I have really compressed my knowledge here. So if you want to learn more and also take trades live with me every single day, join our community, link in the description. I will see you on the inside. And if you got value from this video, subscribe. Bye-bye.